Hello, welcome everyone to this video presentation by me from my residence in London. I was really looking forward to being in Dubai to participate in GLOBOIL Dubai, but unfortunately I have not been able to. However, I hope you will all enjoy my presentation and carry away some good ideas in what is an extremely exciting market outlook. So here we go. First of all, congratulations to GLOBOIL and to TEFLAS, to Kailash Singh and his team, and to my friends and colleagues in the Solvent Extractors Association. GLOBOIL is perhaps now the biggest brand in the veg oil space. It is known all over the world for its great all-round value, the vast networking opportunity that it offers, the first, I may add, to recognize the value of the West Asia market by having an international conference in Dubai. And the brand has been going strong for the last 2 decades or more. It is a win-win, ideal partnership between TEFLAS and the Solvent Extractors Association. Now, before I launch into price outlook, as I usually do, let me give you a quick tour of the background in our market. We came to this juncture after 2 successive La Nina weather happenings in South America. The last one particularly was quite serious, and we lost 30 million tons of soybeans. The sad part is that the third La Nina is possible this year. That's what the weather forecasters are saying. It is not a certainty, but there is a possibility of a third La Nina. To compound that, we also have this mishmash from Indonesia of an export levy, an export tax, and finally an export ban. I am recording this video on Saturday, the 7th, and my hope is that by the time GLOBOIL International in Dubai takes place, the ban will have been lifted. But if it is not, it will still be only a matter of days before it gets lifted finally. We have also come to this juncture with a critical labor shortage in Malaysia with no sign of any change in the labor situation. We have come here with the Biden agenda of biofuels and renewable diesel programs in the United States. We have come here through the pandemic, which led to the closure of palm oil mills and created a shortage in the market. We went through 2 years as a result of COVID of excessive, aggressive QE, which led to huge liquidity in the market. And then to compound the problem, India resorted to import duty reductions, which, as you know, put fuel to the fire. We had last year a critical drought in the Canadian prairies, which reduced the canola crop. And then Indonesia hiked her export taxes in order to pass on some subsidy to the domestic market. And then we have had conflict in the Black Sea, which lit a fuse. The loss of sun oil exports, particularly Ukrainian sun oil exports from the Black Sea. A strong rise in the price of crude oil, corn, wheat, and most commodities as a result of the conflict. And then the final straw was the actual ban on the 28th of April on export of palm products by Indonesia. So in short, we have what I would call a perfect storm. Now, the 2 pillars of the storm, one is the war in the Ukraine, and the second is the Indonesian ban. Let us look at the implications of the war. Export of corn, wheat, sunseed, sun oil has dropped to a trickle, particularly from Ukraine. Exports from Russia are also restricted. But the worst effect is the planting of crops for 2022 summer harvest. And these plantings of Sunseed may be only 40 to half 40% or 50% of the Ukrainian normal. So that is, we are creating a shortage for next year. And the rest of the world is going to have to step in to plug these shortages. Let us look at the implications of the Indonesian ban on palm exports. As I said, I hope the ban is lifted by the time you hear my speech. But if not, let us look at the implications. First of all, this is a domestic Indonesian problem which has been internationalized. And I think the nub of the crisis is the huge disparity between domestic and export price. When you have a disparity where the domestic price is about $800 a ton and the export price is $1,800 a ton, there is a margin of $1,000 between exporting or delivering to the local market. There is bound to be disruption and the local market will suffer. This is something I have been telling our Indonesian friends, but it has fallen on deaf ears. Now they are actually experiencing shortage of material in the local market, and I hope they can find a way to solve that situation. I believe the president of Indonesia is very angry with the palm oil industry, but unfortunately, Indonesia, unlike India, lacks a strong public distribution system, what we call PDS, by which people below the poverty line can get subsidized food grains, cooking oil, pulses from the government. If you have a good distribution system for that, this situation of shortage and lack of cooking oil in the domestic market would not have arisen. So it's not too late for Indonesia to put into practice, and I believe they are doing that with Bulog now, but it is not too late for them to do that for the betterment of their own consumers. Indonesia needs to export every month. They produce far more than their domestic needs. If the ban extends over 3 weeks, it will lead to storage problems and it will affect smallholders whose FFBs will not be purchased. As I record this video, I know that FFB prices in the interior in Indonesia have fallen sharply. So there has to be a win-win settlement. I believe one settlement has been discussed and people are working on it furiously, and it is only a matter of time before Indonesia will have some kind of a public distribution system to distribute cooking oil, and they will be able to modify, relax, or remove the ban completely. Let us look a little ahead once these two crises are out of the way. Ukraine and Indonesia. Most economists feel that we are in a position of stagflation, where the economy does not grow and there is a problem of inflation. Stagflation leads to recession. And recession and high commodity prices are not compatible. Therefore, in second half of 2022, I believe we may see a dramatic fall in commodity prices, including the price of energy. The energy price has been ramped up by OPEC's tactics. Otherwise, there is no shortage of energy in the world. What Russia is not able to export to Germany or to Europe, Russia sells to India, maybe at a discount. But the oil is there, it is flowing. The actual production has come down very little. And Saudi Arabia and the UAE and Iraq and others have got the capacity to produce more oil. So from that point of view, I don't think one should be terribly bullish on energy prices. Again, growth is going to slow down. Demand is going to fall away. So basically, we are looking at lower prices in the second half of this year. The other gorilla in the room is the US Federal Reserve. What of the Fed's actions? Will the US Fed deliver a soft landing? Many observers are saying that since 1955, the Fed has never been able to control inflation by raising interest rates successfully in what is called a soft landing. They control inflation, but invariably through a recession. The Fed raises interest rates, tightens money supply, leads the US into recession, and then recession leads to lower prices. So is that what is going to happen to the US economy again this time? And I repeat what I have been saying, in a market-oriented situation, what happens? You are all traders, so think for yourselves. What happens when the Fed begins to reduce its balance sheet? That means the biggest buyer of US government debt turns a seller of the same debt. He doesn't buy anymore, but he actually starts unloading 50 to 90 billion of US government securities and mortgage-backed securities every month. Historically, as I said, the Fed is good at pumping up the economy, but it is not good at controlling inflation without a recession. Mark my last three words, without a recession. So it looks to me that a recession is on the cards in 12 to 18 months' time. Now I come specifically to our own industry, particularly palm oil. I estimate Malaysia will produce only 19 million tons of palm oil in 2022. Fertilizer cost and fertilizer availability is now a big factor. Cost of production will rise dramatically because higher wages will be necessary. And I am afraid, I am very pessimistic that the labor shortage will persist through to the end of the year. There is very little attempt made to bring in new labor because new labor means higher wages. Let us look at palm in Indonesia. Production will be up at least by 2 million tons. In fact, my friends from GAPKI, most of them are saying that production is good and it could be up by 2 to 2.5 million tons. Along with the lifting or relaxation of the ban on exports, Indonesia may also tweak her export levy and its export tax regime. In any case, there is a formula based on the reference price. So if the reference price comes down, automatically these taxes will come down. And there is a downward spiral which accelerates as prices come down. So we have to expect that. As I said, I run the risk that between Saturday, the 7th of May, when I am recording this video, and the day when it is presented, Indonesia may do something and I may appear to be a little bit outdated. So please forgive me. I come to another very important oil seed, which is rapeseed. And I know particularly because there is a very fine, outstanding rapeseed oil supplier here in Dubai who has done a lot of business with India. And many Indian buyers are, I think, chasing him because they have to replace their sunflower oil with rapeseed oil. We can expect a recovery in rapeseed production in Europe and Canada. Indian mustard seed production hits a new high, but the peak pressure of mustard arrivals is over. It's finished. Indian mustard prices will now gradually move higher. And that is why I feel that India may have to import a little bit of rapeseed oil to completely cover the deficit in sun oil. Indian local rapeseed is of a very high quality. It is mustard seed and it is required and consumed locally. But low arusic rapeseed oil, which is what canola oil, which is what the world trades, if it goes to a discount to soybean oil, once again, it may not because there are problems on rapeseed production in Ukraine. But if it does, then India would be there to buy small quantities of that, and once again this year. Let us look at soybeans. The outlook for soybean production in North America in 2022 has improved compared to 1 month ago, not overall. Corn and wheat outlook is still more bullish, and corn will be the first choice of farmers in terms of acreage. But corn is an expensive crop to grow because of the high cost of fertilizer and the wet spring that we have seen in the United States. So in that case, corn plantings may not come up to expectation, and farmers may then switch to soybeans on the leftover acreage. So I don't rate the chances of big crops in the United States very high for this year. The forecasts for growing weather are also not great. In my opinion, the relief in the soybean field will only come if we have big bumper crops in South America, which will be planted in late 2022 and harvested in early 23. I have already spoken a little bit about Sunseed, and the Black Sea Sunseed belt is unfortunately now a conflict zone, so we cannot expect much from there. But we shall carry forward stocks of sunflower seed into the new season because exports are blocked right now. And there will be a wall of sunseed and sun oil to come out of Ukraine once hostilities cease and once the infrastructure, the ports begin to operate once again. It will take time, but it has to come. And that will alleviate the smaller crop that we expect to be harvested in August, September this year because of low plantings. Two other countries that one needs to talk about whenever we discuss price outlook. First is China, the second is India. China faces a slowdown, no doubt about it. The consumption of commodities is likely to be softer. And very importantly, Chinese players, Chinese traders, Chinese investors, speculators are no longer big bulls in the commodity markets. In fact, we see them more on the sell side these days. Also, China may not be the steam engine for world growth that we used to be accustomed to earlier. These are factors we need to bear in mind about China. India has aggressively lowered import duty, and there is talk once again that they will lower the what is called the cess on soft oils to give relief to Indian consumers. High prices have stimulated domestic production of oilseeds, and that is a good development for India. But inflation is a very big problem in India for 2022. Problem for the population, problem for the government. And a lot will depend upon the monsoon. The current early forecast is for a normal monsoon, and we hope and pray we shall have a normal monsoon. But in the monsoon, the timing and spatial distribution of rainfall is much more important than the total, whether it is 94% or 96% or 98%. And really speaking, in India, the most crucial rainfall, like in North America, is August rainfall. So we will have to watch and see whether August rainfall is good for Indian Kharif crops. I have slashed Indian imports for 21-22. My earlier estimate was 13 million tons. Now I feel with the lower imports because of high prices and demand destruction, our imports will get to 12.5 to 12.6 only. And I have slashed sun oil imports to 1.7, but we may not even get to 1.7. It all depends on when the hostilities in the Ukraine cease, because our monthly imports of sun oil have come down to less than 100,000 tons monthly. So India will import more palm. I have increased my palm figure compared to my previous paper. And soybean oil also India will import more. And I have put others as 250, which will mainly be laurics and byproducts and such things. So 12.6 is what I expect. Now, let us sum up the world picture. World energy demand grew in 2021 by 1 million tons, and we expect 21-22 to grow only by 1 million tons because of high prices. Even though the capacity for biodiesel and renewable diesel is expanded much more, I don't think all of it will be used next year or in the current year. World food demand normally grows at 3 million tons annually. 2021 grew by less than 2 million tons. And I feel 21-22 will also grow by only 1.5 million tons because of very high prices. So the net effect is that world demand increases by 2.5 million tons last year and this year. Now let us look at the incremental supply demand summary, which is how we assess the situation. And here there are some assumptions. 21-22, you can see that I expect total supply to go up by 1.5 million tons and total demand to go up by 2.5 million tons. So there is a deficit of 1 million tons. Last year, there was a deficit of 2 million tons. Now, the reason why I have kept the deficit down to 1 million tons for the current year is that I have assumed that the amount of sun oil available in the market will be the same as last year. It was actually going to be more because the crops are better. But sun oil is blocked, it is jammed. So there are stocks or supplies of sun oil which are available or which are there, which are present, but which are not available to the consumer. They are not for sale. Ukrainian sun oil is blocked. Russian sun oil, half of it is blocked. So that is why I have put that asterisk. And even though I estimate that total supply of world vegetable oils is going to increase by 1.5 million tons, it all depends upon the Black Sea blockade. It may not increase at all, and the deficit for the world may be much larger, could be 2.5 million tons. I am keeping my fingers crossed, and I feel that slowly more and more sun oil will start seeping through either by land or by export of Sunseed by land and crushing in Romania, Bulgaria, Turkey, etc. And eventually, when the war finishes, because I don't think this war can continue for more than a month or 2 months. Both sides are taking huge losses. So good sense has got to prevail and a settlement has got to be reached. We hope and pray that a settlement takes place and that trade begins once again in earnest. Having seen the world SNDs, as I said, until normalcy returns, Black Sea sun oil exports of at least 500,000 tons need to be replaced. They are blocked. Supplies of oilseed and oil in Ukraine and Russia distort the SNDs because they are not available for consumption and volatility is going to be very high. Look at the outlook post-normalcy. Once ceasefire comes in, once ports begin to operate in the Black Sea, there has already been demand destruction. No doubt about that. Palm production will from now onwards pick up and it will weigh on prices. Prices can fall sharply once the Indonesian ban is relaxed. We saw prices fall sharply on Thursday and Friday of this week, or last week, as you may say, based on the fact that everyone knows that the Indonesian ban will be relaxed at some stage. And remember, interest rates are going to rise, production picks up, stocks are unfrozen. These are all relatively bearish factors. I expect that the BMD third month should decline to 5,000 ringgits by June and eventually to 4,000 by September. I am not more bearish. I think 4,000 will be a good support in the market, and I will explain why. I think India will have to consider reinstating import duties. This present plan of the government to remove the cess or to reduce the cess is a wrong step. It's a retrograde step. They should not do it. And by September, they should reinstate import duties to protect India's farmers. India has been badly hurt by the actions of Indonesia, and India and Indonesia need to talk to each other to avoid these misunderstandings again. And the world economic slowdown will weigh on prices. Energy self-sufficiency will be the new mantra in 2022. Depending on Brent crude, biodiesel production and demand will remain strong. And that is why I feel that the biodiesel part will be a big support to veg oil prices. And as a result, veg oil prices will not decline. Palm will not decline below 4,000 ringgits. If it does, it's out of anyone's hands. But I don't think it will. On lauric oils, they are much more linked to economic growth rather than edible demand. And prices should begin to drop from now onwards to around 1,200 to 1,500 CIF Rotterdam. And coconut oil has already regained its premium to palm kernel oil, and that will continue. So finally, my friends, it's been a great pleasure being with you, talking about market outlook. The big gorilla is the Fed, and the Fed holds center stage. The two focus areas for the short term are Indonesia and Ukraine. And we hope and pray that both will normalize as quickly as possible, particularly Ukraine, because a lot of human misery is being undergone. Inflation is going to be a big problem. And that means that as the months go by, countries will have to take firm steps to control inflation, including the US Fed. This is going to lead to challenging times ahead, and you are going to need all the help you can. And that is why I will finish by saying, good luck, God bless. And with those words, I conclude and wish TEFLAS, solvent extractors, and all of you, and the wonderful country of Dubai and its wonderful expo, which was a huge success. Heartiest congratulations. My bad luck that I am not with you, and I wish you all absolutely the best.